Looking at the Markets with David Modell. Hello and welcome to Looking at the Markets with David Modell, optimizing inefficiencies in technical analysis. That's kind of what we do, isn't it, as traders and investors? We see inefficiencies. We see things that aren't quite right in the markets and on our charts, and then we pounce on it in order to maximize our gains. And you're looking at an amazing platform right now, and I want to share that with you, and also perhaps some tips with my guest. He is Jake. He is from TrendSpider.com. Jake, welcome back to Looking at the Markets, sir.
Hey, happy to be back. It's been a while. Hopefully you've been staying safe and secure, and looking forward to going over some of these ways that you can really optimize some of these headaches in the market, whether that's looking at volume and trying to figure out where that volume is on the chart, automating the process of trend lines, and even looking at seasonal trends without having to go and do that manually. So I'm excited to jump in and get started and talk about some of these things and how you guys can do this using TrendSpider.
Yeah. And at any time, if you're watching this and you want to get the TrendSpider platform that you're looking at right now, I want you to go to, in your browser, TrendSpider.com, TREND, spider.com, or you can go below this video to the link in the description, and you could just click on that and it'll take you right there. It's a really great deal, and they also have a free trial, but you're going to want to do the paid trial, do the paid subscription as well, because you're going to want to avail yourself of all the tools on TrendSpider. But it looks like we're looking at Home Depot stock right now, a nice looking candlestick chart. What are we looking at here, Jake?
Yes, so we're looking at Home Depot. We're looking at a blank chart, and the first question that comes to probably a lot of traders out there is, what is the overall trend? What are some relevant trend lines that are on the chart that I should be looking at? And something that's on TrendSpider that we really kind of started the company from is the ability to automate this, and not automate it to replace what you're doing by hand. It's there to actually complement what you're doing by hand, and allowing you not only to not just look at what your eye is seeing and possibly your bias if you have a position, but also maybe what other people are seeing and you may not see it. So to do this, I simply go to trends, right? If I click on trends, all of these different trend lines pop up. And these trend lines are not there to pollute your chart. This is like the first step in the idea generation. You have all of these different possible trend lines to choose from, and everybody is going to look at this differently, right? Somebody may see this. They may see this bottom line here, and I'm just double clicking on these lines. They may see this upper line here, and when I turn off trends, we have an ascending wedge. Now, that's one perspective. Now, maybe somebody else is looking at these same exact lines, and they're saying, well, that's quite the broadening formation. We turn it off, and that's perfectly fine too. And that's the beauty of the market. Everybody has their own perspective. There's so many different ways to view the market. That's what makes the market. Somebody may be trading this broadening formation while somebody else may be trading the ascending wedge. So the point of the automated trends is really to allow you to still have the discretion of drawing your own trend lines, but allowing the system to keep it consistent, and then you have the discretion to go in and choose which ones fit your style. Now, when I turn this on, this is just one way to look at the trends. We have different preferences here, right? So maybe you want to connect body to body instead of wick to wick. If I click on body here and apply it, you'll see that these different trends pop up, because now we're connecting the bodies of these candles rather than the wicks. So you can see that, using this body to body, technically we've already broken down through this ascending wedge formation. Does that mean that it's wrong? No, it's just a different way to apply your technical analysis and see the chart. Some people prefer bodies, some people prefer wicks. That's why we have both options for you to go in and make it your own. The automation is not there to replace, as I mentioned. It's there to be an idea generator and essentially a bunch of different permutations that you have the ability to go in and personalize. So you can use this on any chart. If we go to Verizon, we'll pull up the chart, and one thing that I want to mention here is the system will actually be time stamped. So you'll see here that these trend lines were drawn way back on October of 2019. That shows how long it's been since I've looked at Verizon. So see all these trend lines here. These were drawn way back in the day, a year ago almost. So if I go and actually refresh and lock these, all of the most relevant lines are going to pop up on the chart. And as I mentioned, these are just the most relevant lines for the preferences we're in. If we draw these body to body, the trend lines are going to change and we have a different setup. All of a sudden, we kind of have this interesting, I don't know, I guess it's kind of like a mini ascending wedge. I don't even know what to call it. But, it's and that's the thing. A lot of people get caught up in making technical analysis pretty. Drawing trend lines, yeah, sure, it looks pretty if you have perfect trend lines. But there's a lot of times on the chart that these trend lines that aren't necessarily the most pretty trend lines on the chart still have the highest rate of kind of being touched or being kind of interacted with. So that's something that's also interesting is TrendSpider is not here to make your charts pretty. Yes, you can find very pretty trend lines that will make your chart look really nice, but it's really about finding the most relevant lines that have the most touches, the most bounces, that make a trend line a trend line. And I know, David, from our previous conversations, that's something you look at a lot. Mm-hmm. You want to look at trend lines that touch price action as many times as possible.
Yep. I call them data points. I feel that the more data points a trend line has, whether it's support or resistance, the stronger it is, at least psychologically. I don't know if that's true in practice, but it makes me feel that it's a stronger trend.
Mm-hmm. No, 100%. And I think you're right on the money. And I think there are programs out there by bigger institutions and funds that are looking for these types of things. So, we want to make the playing field even, equal. I try to say even and equal together. That didn't come out too well. So, we want retail traders to have the same type of tools as these big prop firms and these institutions have as well. So, by giving you the ability to automate some of this, there's plenty of institutions out there that I guarantee you have something like this, but it's proprietary and they're not going to share it because it gives them an edge in the market. Well, we want to provide that edge for everybody who's a participant in the market, whether you have $100 in your account or whether you have $1 million. So that is one way that you can really optimize the process, remove bias, see different trend lines that you may not even be looking at. It may be something that the rest of the market sees, but you don't. And it's like, holy crap, I didn't even see that resistance line. And then it allows you to kind of train your eye to see things in a different way. So that's the first part of optimizing these inefficiencies. The second part is something that we call anchored volume by price. And I think we've done something like this before on the videos, but I really want to focus on this because most people are using volume at the bottom of the chart, which is fine. At this point, volume is a function of time. As time goes by, we're measuring volume day by day. But at the end of the day, the market is moving based on supply and demand. We want to know, since, let's say, the March low here, where are a majority of shares holding? Where is the distribution of volume? And it's hard to really see that by just looking at these volume blocks. What I used to do as a trader is I would have to go and say, okay, that's a bigger volume block here. Let's show that where the price is, and then we need to extend that out to highlight that area. If you do that for all of the volume blocks, it's going to take a hot minute. So what we have the ability to do, and this is something that is very proprietary to TrendSpider, and the overall experience is very unique, is something called anchored volume by price. So instead of looking at volume as a function of time, we're looking at volume as a function of price. And this is something that's not necessarily that special when you're just looking at the volume by price. The volume by price is something that's available on a lot of platforms. But a lot of platforms do not have the ability to simply say, all right, what's the volume distribution since this low here? And you're able to see very quickly, how the price action is interacting with these areas of volume. So the psychological, or kind of the way to look at this, is essentially to think of these areas as break-even zones or profit zones. So as the market was trading way up here in the 300s, these shares, essentially these represent a number of shares that are held by participants, they were up 16%. So if you're holding at a 16% profit in really not that long of a time, I mean, we pretty much started, let's say around here, that's 16% in less than 2 months on an index. That's insane. So you have to think, all of these shares holding at a 16% profit, once the market starts to turn, it's very easy for you to go in and be a seller because you have profit to work with. Now, as the price, at one point you're up 16%, as the price starts dropping, your profit margins are going away. And finally, once the price gets back down to where you initially bought it, you can no longer be a seller unless you're getting a margin call or something like that. So these areas are actually respected by price very well. So notice what happened. We broke down on Friday, and we literally broke down even more on Monday before reversing. And what happened? We bounced right at this block of volume here. And why is that? Because once everybody was holding break even, they had no reason to sell. And a lot of people forget in the markets that, just because the price just because you have an increase in price does not mean it's necessarily an increase in demand. You may just have a decrease in supply and demand remaining constant. If you guys want to check out our supply and demand video going over the supply and demand curves, this will explain this. But you don't need demand to increase for price to go up. You need either supply to decrease relative to demand, which is going to increase the equilibrium price, or you need demand to increase more than supply. So for all those people that say, oh, buyers came in and the price went up, or sellers just dried up. And so remember, as the price got down to this volume shelf area, selling dried up because these sellers no longer had any profit to sell. They had to just hold. And as a majority of these people start holding and not selling, that dries up the supply, and that changes the supply and demand equation, and you get your increase in your equilibrium price. Now, what's really interesting here is now as the price went back up to this next zone here, this is a break-even zone for sellers. So as the price started dropping, let's say from around 270 down to 260, they were down 3.83% on average. So then once the price went back up, they're back to break even. And some people may say, all right, well, I got in too early and I want to get out. I'm break even. I'm just going to take it as it is and just move on. This area, this block, becomes a supply zone at first. So you'll see a lot of the time, the price will bounce back and forth between a supply and demand zone. We call this a demand zone because this is where all those buyers were. We call this a supply zone because this is where people are holding at an unrealized loss and then breaking even and getting out. This doesn't mean that this area has to act as a supply zone the whole time, but initially when price goes into this zone, you'll have some of those break-even sellers come in, and that's what creates a little bit of consolidation for price. So notice here, it's not really a shock that the Qs moved up right into the middle of the supply zone and kind of got stuck. So remember, supply and demand are really the drivers in price. People all the time will say, no, that wasn't supply and demand that moved the price. That was news. Well, of course, news is the trigger. It's like if you're at Yellowstone and there's a super volcano under you, there's earthquakes all the time. Just think of an earthquake as a news story, right? There's news stories all the time. When whatever is under Yellowstone gets to the point where it's ready to explode, the earthquake is going to be the driver of that explosion. But there's earthquakes all the time. So the underneath, kind of whatever you want to call it, the caldera, has to be ready to explode, i.e. supply and demand. So for people who say, oh, the news is what pushes the price. No, news is the trigger. Supply and demand needed to be in the right spot for that news to create the move. So that's the way to kind of look at it is, there's always going to be news events, but you have to have supply and demand in the right kind of setup in order to get the moves that happen from these news events. So this is something that's really powerful, allows you to see, where there's break-even sellers. Where is a big spot that a lot of people are holding at a loss. So for example, if we go to Disney and we go to, if we anchor the volume by price from this pivot point before the next leg up, we can see a lot of people are holding at a loss. A majority of shares since July 30th are holding way up here. So if the price moves up and they're able to get out, this is likely going to be a supply zone at first, because you're able to see that this is where a majority of people are going to break even. So now they're down. As the price moves back up, they'll be back to break even. Some people will be like, well, that was fun, I'm getting out, and I'm going to go find a better opportunity cost elsewhere. So that's how you can use that, looking at where people are not only holding at a gain, but also holding at a loss. And it's something that is really a visual tool to see these things in action. Now, the last thing I'm going to go over is something that really optimizes the inefficiencies of seasonality. Let's say that we go to Tesla, right? And we want to see how has Tesla performed every September, or we're about to end September, so every October. You would have to go and look at every single candle. Okay, here's October here. All right, there's one. There, let's see, another October here. All right, that took too long already. I'm on the 2nd October. What we have the ability to do is actually see seasonality on a particular stock by simply going to the sidebar, clicking Show Sidebar, and we have a seasonality widget. So what I can do is I can simply go to whatever time frame I'm looking at. So in this case, if I go to the monthly time frame, not only are we seeing a pretty ugly candle on the monthly chart, but we're also seeing, remember, we started the volume profile from the IPO here. Most of the shares are holding here. Notice that there's no shares supporting price up here, at least yet. Can the price drop back down, and then you've got a move back up, and then you've got something like this pops out, and you got another volume bar here? Sure, that can happen, but for now, there's really no volume up here supporting price. Almost all the shares that have really participated are holding at an 800% gain right now. So what this tells us is there's a lot of people with a lot of profit to work with. What happens when everybody's in a lot of profit? It's a lot easier for people to sell. So that is the technical thesis, right? But then we go to the seasonality thesis, and let's say that we go back to June of 2010 when we IPO'd. You'll see here that September and October are seasonally not great months for Tesla. So looking at this 36% and this 40%, in 40% of all October, the change percent was positive. So that means in the last 10 years, or I guess it's 2020, so this is the last 9 years, 40% of Octobers have closed green. That means 60% of Octobers have closed red or break even. And so this allows us to not only use technical analysis, but also pair that with seasonality to get a better view of what's going on. And so, obviously the month of September is not over. This candle could easily become a large bullish candle, but it's pretty unlikely at this point. Can it happen? Yes. Would I guess that this is probably going to close as quite an interesting hanging man or even a stronger bearish candle? Probably. So you're pairing that with only a 40% win rate in October since 2010. So that's the monthly. Let's say that you're day trading Tesla and you want to know how is each day of the week performing. You can go, in this case, we're looking at 2010. Well, maybe we want to look at since the start of 2020, how has each day performed? And so you'll see here, 68% of Mondays close green, at least for the year of 2020. And you'll see how this changes over the week. 61%, 62%, 50%, 44%. So for Tesla, at least, as the week goes by, the percent change positive rate goes down. So only 44% of Fridays have closed green in 2020 versus 68% of Mondays have closed green since the start of 2020. So this is something that really allows you to not only use technical analysis as a way to get an edge in the market, but also optimize those inefficiencies within seasonal trends and that type of thing in the market as well, to get a holistic view on the market, not just a technical, not just a fundamental, not just a seasonal, the whole thing in one view. And so, hopefully this video helped you guys understand the different ways you can do this with TrendSpider and how you can really get an edge using our platform.
Yeah, I mean, just looking at a different way of using volume or visualizing it, I think that is so cool. You already taught us about the raindrops, which are like candles but better, more enhanced and more informative. And this is really cool. And I also got a few trading ideas from you as well. in addition to everything else, I'm looking at Tesla and Home Depot a little differently right now, maybe for some trades. But okay, very good. So I do want people to get these tools, because what Jake talked about today, you're not going to be able to do it on just about any platform, really. You really need to go to TrendSpider.com, either type that into your browser or go to the link in the description below this video. Just click on that. It'll take you right to it. Jake, is there still a free trial going on?
Yes, absolutely. 7-day free trial. If for some reason that you do need some extra time, we are open to extending that for an extra 7 days if you do need it. But we do feel after a couple days of using the platform, you'll see the value for yourself. However, we know that life comes up, things happen, work happens, family happens. So if you do need some extra time, we are flexible on that front as well. And we're excited to have you guys as customers or potential customers. And the main goal is really just to change the way that you view the markets. Take some of those things out that help remove bias, or take some of those things out that give you bias and replace them with things that help you remove bias. And so we went over a couple of those things today. As I mentioned before, if you guys do want to check out the supply and demand video with the supply and demand curves and how that works, just type in TrendSpider supply and demand, and it should be the first video that pops up, so you guys can understand the way that works a little bit too.
Yeah, I know that you and TrendSpider post a lot of videos. You post them on Twitter, all the links, and people should check those out as well. Very informative, and you have some amazing guests as well. So, speaking of amazing guests, this has been Jake from TrendSpider. You've been a regular here, and you have an open invitation. We got to get you back to update everybody on how these tools are working out for you, and let's see what happens in this wild and crazy year in the markets. So thanks a lot. Thanks, appreciate it, Jake. Thanks for stopping by once again, and everybody check out TrendSpider. But thanks a lot, Jake. Thank you, sir.
Hey, thank you, everyone. Have a good one, and thanks for watching.